Look at the New York Stock Exchange at 4 p.m. on Friday. The closing bell rang with the S&P 500 sitting at 7,041, right near an all-time high. That valuation is not an accident. It is the output of a mathematical model pricing in a reality where three specific global conditions remain perfectly intact. The first condition is geopolitical. The market assumed the recent US-Iran ceasefire in the Middle East would hold. The second condition is domestic. Traders bet that the American political system and the physical safety of its leadership would remain completely secure. The third condition is technological. Investors needed to believe that the hundreds of billions of dollars tech giants poured into artificial intelligence would rapidly translate into actual, measurable revenue. The entire American stock market was operating as a highly calibrated mechanism. It required all three pillars to survive the weekend without a crack. Between Friday evening and Sunday morning, the US-Iran peace talks at Islamabad completely collapsed. The immediate military consequence was Iran threatening to close the Strait of Hormuz, with US military tankers spotted moving into position at Israeli airports. If the strait closes, the financial reaction is instantaneous. Brent crude oil spikes back above $100 a barrel. When global oil hits that threshold, US gas prices climb straight toward $4.50 a gallon. That pulls cash directly out of household budgets, suffocating everyday consumer spending. Sudden energy inflation traps the Federal Reserve. Chairman Jerome Powell cannot execute the interest rate cuts the market had previously factored into its models. A geopolitical failure in Pakistan instantly deletes the specific economic logic, cheap energy and cheaper borrowing, that drove the market's 12% rally over the previous week. Then came Saturday night. A gunman stormed a security checkpoint at the Washington Hilton during the White House Correspondents' Dinner and opened fire, specifically targeting the president. This occurred in the exact same hotel where John Hinckley Jr. shot Ronald Reagan in 1981. Over the last 2 years, financial markets have developed a distinct pattern. When an attacker targets Donald Trump, trading algorithms briefly acknowledge the event and move on without triggering a long-term sell-off. But this attacker stated a wider goal. He explicitly intended to shoot the administration at large, aiming for the numerous cabinet members gathered in that specific ballroom. This chart outlines the chain of presidential succession. Having the cabinet in a single location creates severe systemic vulnerability, introducing a political risk premium. This succession risk is impossible to price accurately, quietly increasing the underlying fragility of the entire economic system. Trading algorithms are programmed to ignore a grazed ear, but a physical threat to the entire chain of command creates deep structural instability that mathematical models cannot process. In the middle of this chaos lands the most crucial financial event of the year. Meta, Microsoft, Alphabet, Amazon, and Apple all released their earnings reports this week. Since 2023, these 5 companies have collectively committed over $600 billion to artificial intelligence capital spending. The market is now demanding absolute proof of revenue return on that massive physical investment. Traders are looking for exact metrics. For Microsoft, that means their cloud computing division, Azure, needs to show growth crossing the 39% threshold to justify the spending. With oil threatening to spike and interest rate cuts completely off the table, these 5 tech earnings are the absolute last structural support keeping the S&P 500 aloft. All of this collides right at 9:30 a.m. on Monday morning, when the bell rings and the market is forced to react to the weekend. The group carrying the highest exposure into this morning chaos are the retail investors who chased the rally late last week. They are trapped because they bought into assets priced for a peaceful, stable reality. That reality was entirely erased in just 72 hours. The rest of the week will be defined by a brutal test. Either tech earnings are strong enough to absorb the macro noise of war and political violence, or the core logic supporting the American economy shatters.